trade gold to generate a profit denominated in Federal Reserve notes. When they do so, they use techniques such as trailing stops, which automatically sell them out of a position the moment the price breaches a certain point. And the sophisticated trading houses, they know how to use their computer systems to basically test the paper prices to identify where those stops are set. And so when the time is right, they can very easily, by using futures and options, gun the market to run those stops, and then the computerized trading systems basically do the rest for them. You know, they start selling once the stops are hit, and they will keep selling because the computers are set up to basically follow momentum. And then, you know, once the momentum dies out and all the selling is done, basically the major trading houses can buy back their positions at a much more favorable price. And I think that the manipulation goes in the other direction as well. So that's basically what I see in terms of
yeah, and that, like, I completely agree with you on that. Mm-hmm. But that's also part of this, is that ability to use what essentially is the data of their clients and where their stops and where their margin sets are, and using that to trade against their clients, right?
Well, they don't need to know specifically where the stops are set. If you take a look at the price action, right, you can see that the computer algorithms are doing some short-term buying and selling just to test the market, to find out where the sensitivity points are. And then once they identify the points at which they can create a lot of pain, you know, they can set up their computers just to basically flood the market with paper gold.
And that it's really interesting that we got down this road a little bit, because one of the biggest uses for Bitcoin, and I know this was in your notes too, is trading became a huge thing during this last bear market. All these margin trading platforms that'll let you deposit Bitcoin and then leverage it up to like 50x and trade on margin with it have exploded. And part of the reason is because people aren't patient, and they want to like get they got really used to getting a large amount of profit, and all of a sudden they weren't seeing that, and they're like, well, how can I still get profit off this? And in come these margin platforms, and most people got what we would term wrecked in it. I've seen more things of people getting liquidated on BitMEX is like a huge meme in the cryptocurrency space. And that's what anyone who's actually, even the people that are doing that, will tell most people to stay away from it, because it's a way of moving Bitcoin from weak hands to strong hands. And you don't want to be one of the weak hands being moved. Just like if you don't know how to trade, you don't want to be in a paper market in that same sense, because the odds are the typical retail trader is going to get wrecked using those types of accounts.
Right. And that's why I'm a fan of basically physical ownership, right?
Oh, yeah.
Because if you're always looking at the price on a price chart and you have easy ability to buy and sell, that's when you're going to basically get yourself into trouble.
Totally. And that's actually where the mantra in Bitcoin, one of the biggest mantras you'll hear, and I know I just went against it when talking about like an interest accruing platform where I let someone hold some Bitcoin for me and earn interest on it, is completely against the ethos of Bitcoin, where the phrase "not your keys, not your coins" will come up all the time, where the same is like, if I don't have the private keys to my Bitcoin, I'm letting someone else hold them. It's essentially the same as having a paper gold contract.
Right. But, you know, I mean, long term, I have confidence that, you know, the value of gold will basically continue to go up relative to the Federal Reserve note, and it will preserve its purchasing power much more so. And in fact, because of gold's hardness, I know that it tends to appreciate in value over time. simply because of the way that the system is set up, right?
But couldn't you say that about, like, going back to the Picasso? Couldn't you say that about anything that's truly scarce? You there?
Sorry, I'm thinking about that for a minute.
Okay.
What that would imply, right?
Because to me, you could use a Picasso as money if if it was easily able to be divided up into 100 billion little bits, and still be the Picasso. But you can't do that because the minute you divide it up, it ceases to be the Picasso anymore.
I'm going to say somewhat. I think some items, because of their scarcity, will become more valuable over time. I think that the key ingredient there is a property that we call salience. So, it goes back to the societal agreement. You have to have enough people that focus on a particular item as an item that they desire. And I think if you have rarity and salience, those items tend to appreciate over time, right? So things like an antique armoire by a well-known maker, certain types of paintings tend to appreciate over time. If you take an artist who no one knows, just because they have produced a painting that nobody else has produced, if nobody wants it, then no, it's not going to appreciate over time. It's just going to collect dust and eventually decay, right?
Yep.
But if you get something from a well-known and well-regarded artist, especially if they're dead and you know that they're not going to be producing any more paintings, then yeah, it will tend to appreciate over time. Same thing goes for gold, because gold has salience. And this is one of the main things that I think, in my mind, is a direct contrast between gold and Bitcoin, is that gold has thousands of years worth of salience, whereas Bitcoin might have 11. Now, that doesn't mean that Bitcoin is not going to gain salience, but right now, I'd say that it's a fringe asset as opposed to a mainstream asset.
I would agree with that. I would agree with that assessment.
So maybe maybe as it gains in popularity, it will well outstrip gold in terms of its ability to appreciate. That's entirely possible. Or it could fizzle out.
It could. My fear of it fizzling out has gone way, way down due to the Lindy effect, that idea that, every technology that you look at you're generally at the midpoint of it. So if something's been around for 100 years, odds are it's going to be around for another 100. And if you think about that in terms of Bitcoin, if it's around, there's less incoming supply every 3.5 to 4 years. I just can't see how it doesn't appreciate. Now, I know there's stuff that I can't, you always have to anticipate. There are things that are outside of your ability to foresee. But, it's to me, that idea that in 2014, I didn't treat it like an investment because I thought, yeah, this could easily fizzle out. But, especially in the last 6 months, watching, Square and MicroStrategy and Paul Tudor Jones and all these the big money starting to jump on board, I think what's kind of happened is it's gone from the fighting it to accepting that it's going to continue to be around. And to me, if Bitcoin hangs around, it gains more salience just by the nature of the properties it has.